What's going on, everybody? Welcome back to the channel. Today I'm going to be answering the questions that you guys dropped in the Discord while I was on vacation. So I've compiled a list. I got a lot of questions. Kairos the third, aka KT3, I'm looking at you. But there was a lot of questions submitted, I think like 40 or 50 questions. So I'm not going to obviously do them all in one video. What I am going to do is I'm going to do maybe 2, maybe 3, and then every so often I'll keep dropping the answers to all the questions that you ask. So let's start off with the first one that's on the list. This one comes from Maximus. Shout out to Maximus and everybody else who participated. And his question was, starting trading from scratch, what would you do? So I think this is a very interesting question. I haven't given it much thought, but I will say this. When we started trading, right, I've been trading for 4 years. When I started trading, my perception of the markets and my ideas and my expectations, everything was so skewed. Obviously, after trading for 4 years, you really get to understand what the markets are about, and you get to understand what's realistic, what's not, and what are the important things in trading. So here's the first thing that I would work on if I started trading. Above strategy and all that stuff, first thing I would work on is psychology. And the reason is forcing yourself, right? In trading, you have to overcome yourself and your habits and your weaknesses, and without that it's just very difficult to become the trader that you want to be. So that's the first thing I would work on. But I know he's asking in the sense of like, how would you go about it? Would you buy a challenge? Would you start with your own account? And so I'm going to take it from that angle. If I started from scratch again, here's exactly what I would do. I would still do it exactly the way I did it, which is to start with a personal account, trade that, see if I can flip that a couple times, and then I would go do a prop firm challenge. The reason is trading with a prop firm and trading with your own personal money is way different. They have different levels of psychology, emotional management, and things of that nature. Also, there's a lot of different habits you'll have when you're trading your own account versus when you're trading a prop account. The reason why I would trade with my own personal account first is I need to know who I am at the core, how I handle risk. Like, basically, when you're trading your own account, you're trading without a leash, without restrictions, nothing. So you need to know yourself to the core. So I would probably, depending on which country you're in, I'd deposit anywhere from, to be honest, to be safe, I would say not even 500, like put in 100. Put in $100 and see how you can manage that. Because what's going to happen is that if 500 is a lot to you, you don't want to blow it trying to figure out if you're a good trader or not, right? Some people say trade demo, but demo is not real money. So what will happen is that you'll get into demo, because that happened to me in the beginning, right? First time I tried the MetaTrader 4 platform, I opened a demo account. I would press buy, it would go up like 3 cents or a dollar, and I would hit, sell, and I'd be like, oh, I just made $1. And I'm like, bro, if I do this every day, I can make 10 bucks real quick. It's nothing like that, right? And obviously, some of you guys will not be as dumb as I was. You would understand that maybe you should apply strategy and things of that nature. But either way, it's not something I would recommend. I would say put in about $100. If $100 is a lot for you where you're from, maybe put in 20, maybe 25, maybe even 50, and just to see what you are like when you're trading, your emotions, your risk management, things of that nature. The second thing I would do before going into a prop firm challenge even is to have a solid strategy. That's what I would do differently. So instead of just flipping accounts and then going to prop firms, I would find a strategy that was really like buttoned down. What I did earlier was that I would take trades, I would flip accounts, I would go in based on the lot sizes and put my stops where I felt like. And there was a freedom to trading like that. And to be honest, it's a little bit easier on the psychology because you're just kind of going in with what you feel like. And when it goes well, it goes well. And when it doesn't, it's also not great. But for the most part, it was a bit easier to trade like that. But I would actually button down my strategy, make sure I have a robust, not just strategy, system. You need a robust system. Once I have a robust system or strategy, then I would think of doing things like a prop firm challenge. And in my strategy, I would make sure I have 2 things. Number 1, excellent risk management. I mean like my risk percentages plus my exit points, okay? My exit and entry points, like those have to be key. And then I would make sure that I have a system as to how I handle losing trades or losing streaks and things of that nature. After that, I would then go into a prop firm challenge. So now you're probably wondering, if you go into a prop firm challenge, what should you do? I'm going to do a video on this later on, but there's apparently a difference in psychology depending on the account size that you trade. And it sounds pretty like obvious, but it's not as obvious as most traders think. What I would do is that I would start off with a smaller account, nothing over 25K. I would say do anywhere from 10 to 25K. I think that's a good, like a sweet spot, because 10 to 25K is more realistic money. Like when you see the, especially on a 10K account, you see, your profits going up by like $100, 200, sometimes 50. It's more realistic. Your emotions will still be kind of high because it's new to you, but it'll be easier to manage than when you're trading 25 and above. When you're trading 25 and above and you start seeing, because if you risk 1% on a 25K account, you're risking 250. So if you make, 2% or 1% on that account and you're up 500, you're going to be losing your mind. In fact, the second you see like 150, you're like, let me close, right? And so you want to make sure that you're trading an account that works with your psychology, which brings me to my next point. Trading really starts to click in when you're comfortable with the risk. That's the honest truth. When you're comfortable with the risk, you can trade like how you trade demo, like how you backtest, when you're comfortable with the risk. So I would trade accounts that allow me to be comfortable with the risk and allow me to trade the way I am as a trader in an optimal setting. All right, so here is question number 2. Maximus, again, also asked, he said, you're a fairly profitable trader, but recently things have started to go south. Do you have to change your entire strategy, or it's usually a problem with psychology? This is a great question. Like most questions, it's a bit of a multifaceted question, so there's going to be a bit of a, different answers, but here's how I will start it. When you're a fairly profitable trader and you notice that things are starting to change, you have to identify in everything in life, not just trading, business and everything, you always have to find the root cause of every problem. Because for example, if it is, let's say that you are trading poorly, as in you're just trading spontaneously or impulsively, then yeah, you can say, okay, maybe I should work on my or not even risk management, like my discipline. If the markets, like what we've been seeing recently with the whole Trump rallies up and down with the markets right now, then you have to ask yourself, is it that my strategy is failing, or is it that the market is just, in a condition where it's not favorable to my strategy? Because guys, you'll notice that when your markets are going sideways, your strategy doesn't work as well, right? If your strategy is more buy-based or sell-based, or sometimes it's good for both, then you notice that whenever you're going sideways, it doesn't work. So you need to identify what factor is causing you to not trade as effectively as you could or as you want. And so I would say, before you go into trading your strategy, try and identify the root cause. Is it the market conditions? Is it volatility in the market, like what we got going? Like, figure it out. Is it your trading habits? And then you can go into trading your strategy. Now, if you've noticed that recently your strategy just doesn't have an edge, and it's because the market overall has changed, like for example, the way we trade in 2024 is different from 2025, then you may have to adjust your strategy. Not change, but adjust. That's where you start to look at, okay, right now, so I'll give you an example. For me personally, like let's say, I'll use it in Forex terms. Let's say if my pips were at if my stops were at 10 pips or 15 pips or 20 pips. Now, because of recent market volatility, that's not enough. It's so easy to get wiped out like that. So now my pips have changed, or my stops have changed from, let's say, 15 to 30 or 30 to 60, right? You've had to like kind of increase just so you can have room to breathe. And then you might think, well, you're losing more, but not necessarily, because that's where risk management comes into play. So say, for example, I was risking five lots at 15 pips, okay? Or let's say 2 lots at 15 pips. No, 5. We'll do 5. Let's say you're doing 5 lots at 15 pips. Now you cut it down to maybe 2 or 1 or maybe 3, and you do it at 60. And that way you can reduce the amount that you are trading, like the amount of volume, but you still are risking the same amount, okay? So that's one side of it. The other thing that Maximus asked about is it, you have to change your strategy or your psychology? Again, kind of going back to how I answered it initially. Are you trading impulsively because the market is so sporadic, it's causing you to trade differently? Or is it that you're applying yourself perfectly and your strategy is not working? If you're applying yourself perfectly and your strategy is not working, then by all means, you'll have to go into adjusting or possibly changing your strategy. But if you look at it from the sense of like, yeah, recently I've just kind of been taking random setups, or I'm not following certain rules, then by all means, you've got to work on your strategy, on your psychology. So that's how I would answer this question for you, Maximus. So we're going to stop here at these 2 questions. And in the next video, I'm going to start off with some of the other questions from first, a third, or a deep. We'll see whatever order they're in. And I hope you guys enjoy these videos. If you do, don't forget to drop a comment below. If you have any questions, please drop them so I can add them to the list. And don't forget to like, share, comment, and subscribe. As always, I love you, beautiful people, and I'll catch you on the next one. Also, I know you're not used to seeing me in a suit. I have a lot of business things to do this week, so that's why I'm kind of dressed like this. So you'll probably see me as I'm doing these videos. You'll see me more and more. If you guys like the suit, give it a thumbs up. If you want me to go back to my streetwear, let me know. Don't give it a thumbs up down. Give it a thumbs up still, but let me know in the comments. We prefer you in streetwear.